Your parents may or may not have taught you about credit, and most, if not all of us, were never taught about credit in school, which is really hard to believe that something so significant is not taught in great detail. I believe this is the reason why 56% of Americans use 70% or more of their available credit monthly, while only 18% of Americans use less than 10% of their monthly available credit. My goal is to give you the insight you need to establish, build, and maintain excellent credit. In today's world, credit has become more important than ever. Lenders are not the only companies interested in your credit habits. Now, potential employers, insurance, utility, and cell phone companies, as well as licensing companies, also use this tool to help them determine your character and their risk.
There are 3 independent credit bureaus that report and score your credit history. They are Equifax, Experian, and TransUnion. These credit bureaus use an analytics software company called Fair Isaac Corporation, or FICO, to assess consumers' credit risk by issuing a FICO score. FICO scores range from 350 to 850 and are calculated by algorithms designed to predict consumers' behavior. You can see on the chart that high scores reflect better credit and less risk, while lower scores reflect worse credit and more risk for lenders. FICO scores are calculated on your monthly payment history, debt and available credit, how long you've had credit, what types of credit that you have, and the frequency of credit applications.
Credit scores are constantly in the state of flux due to credit inquiries and staggering monthly billing cycles. Now, there are 2 types of credit reported to the bureaus. Revolving credit, which is an open line of credit, automatically renews as debts are paid off. Some examples would be major credit cards like Visa and MasterCard, store credit cards, and home equity lines of credit. This type of credit is an absolute must-have, and it builds the best credit scores when managed properly. Installment loans, which are paid over time with a set number of scheduled payments and terms as little as a few months or as long as 30 years. Examples would be auto loans, recreational vehicle loans, student loans, and mortgages.
Now that you have some facts, let's look at the do's and don'ts if you want excellent credit. First, don't use over 30% of your available revolving credit card monthly. Secondly, don't close seasoned revolving accounts and open new ones. The credit history is a big factor in your score. Third, don't accept store credit card offers. It's very tempting at the counter when you're offered 25% off your purchase by applying and paying with a new store credit card. But trust me, I've seen this cost people thousands of dollars in mortgage interest. People think to themselves, I'll just pay it off and close the account when I receive the bill. But the fact is the damage is already done to your credit score, and it can take up to 13 months for your scores to recover. What you want to do is pay on time. A great way to avoid a mistake is to put your bills on auto pay. This one tool will protect your credit score and give you peace of mind. Secondly, you want to get only 2 credit cards. Research the incentives that are offered by competing credit card companies and choose 2 that work best for you and stick with them over the long term. And third, you want to use your credit cards monthly for convenience and pay off the balance.
When qualifying for a mortgage loan, the lender will pull a tri-merge credit report, which includes all 3 bureaus' data on one report. One bureau may not report information that another reports, and each produces its own FICO score. The lender uses the middle FICO score to determine your creditworthiness and the interest rate. If there are multiple people applying for the loan, the lowest mid-FICO score will be used. You should review your credit for errors and know your credit scores prior to applying for a mortgage. Once a year, you can get a free copy of your credit report from Experian, TransUnion, and Equifax at annualcreditreport.com. To get your FICO scores, you'll have to pay a small fee, but it's worth it. What you've learned here so far will help you to do the right things to get your credit scores up if they are in the moderate range. If your credit is below a 720, you will likely pay a higher interest rate on your mortgage. People who improve their credit score save $50 to $100 on a typical monthly mortgage payment. It's also fairly common for people to discover medical or utility collections reported on their credit, as well as a state or federal tax lien. These can be avoided by doing your due diligence when the bill is due. Here are a few good tips to help you avoid a bill becoming a collection or a lien.
Work out a payment plan if you don't have the money right now to pay medical bills or state and federal tax bills. You can also negotiate a lower cash settlement on medical bills. Make sure you forward your mail if you move and follow up on final utility bills. Or better yet, put those utility bills on auto pay. I don't ever recommend co-signing for anyone, but if you do, don't leave the payment up to them. Have them pay you and you pay the lender directly in order to preserve your credit.
Once a collection or a lien is reported to your credit, your scores will go down significantly, taking years to recover. And worse, even when you find out that you have a collection and pay it, your scores will still remain low for years. The reason is both paid and unpaid collections count against you because the original bill was not paid and settled. When you apply for a mortgage or an auto loan, the bureaus will give you 14 to 30 days to shop your loan, allowing multiple inquiries that only count against you once. This is a great feature and it gives you time to shop and make comparisons. However, this is not the case when applying for credit cards. Each credit card inquiry will lower your credit score, so do your research and comparisons before you apply for a credit card.
Thank you for watching, and here's how you can help us. First, share us with your network on Facebook, Instagram, Twitter, and YouTube. Secondly, tell your family, friends, and coworkers about us. And lastly, we are publicly funded and need your help keeping our videos free by clicking on the support tab today. Don't miss the tips and timing video found only on our website for all the ways that you can save hundreds of dollars when buying a home.